You need to have a very deep pocket to back up a startup with disruption. You can see some of them went to unicorn level, but then collapse completely without any hesitation. The revenue generation potential, that's the only metrics that matters to me, how the startup can generate revenue. The rest comes afterwards, cost, user, adoption, founding, and so on. But the revenue is the most important. When you launch a startup, don't necessarily disrupt, try to cooperate. You may disrupt later on, but if you start to disrupt from day one, it will take you a long time because first you need to raise a lot of money.
Hello and welcome to FSBrew. FSBrew is the region's first podcast focusing on all things insurance and Insurtech here in the UAE and the wider Middle East. I'm Vidya. I'm the founder of Forward, a startup that works with insurance companies to build their go-to-market digital propositions.
And I'm Ranjit Phillip. I work with a boutique consulting firm where I work on M&A, funding, go-to-market support for startups and tech companies. So in today's episode, we have with us Minh Q Tran. Minh is a venture capitalist with about 25 plus years in tech and finance, focusing on Insurtech, FinTech, PropTech. He leads Mandalore Partners. He provides corporate venture capital as a service. And we'll dig into that in this episode for Insurtech, Impact Tech, and other technology companies. He was previously general partner at AXA Strategic Ventures, which was a 200 million euro fund, co-founder of Odysseus Alternate Ventures. And he's got a deep knowledge of Insurtech and venture cap. So he's going to be a very insightful podcast guest.
Yeah, absolutely. And Ranjit, I'm sure you must have found it quite interesting, this whole model around VC as a service. I think it's a very efficient way. It's be very insightful for our listeners to listen into the whole proposition. But also, I was very excited with the whole challenges and the opportunities that he spoke about from a Europe perspective. Makes all sense from a Middle East perspective as well. So it's quite universal. So therefore, quite relevant for our listeners here as well.
Minh, welcome to FSBrew Podcast. We are very fortunate to have you here.
Thank you for inviting me. It's a great pleasure to be here.
Perfect. Very good. We start off with the typical question about how you got into the Insurtech space, but we're going to do a little bit of a change there. We're going to ask you tell us a little bit more about your work. What does Mandalore Partners do? And it's a great name, obviously. I don't know whether Disney is going to ask you for royalties. And tell us a little bit about venture capital, corporate venture capital as a service, and how do insurers benefit from this model?
Yeah, so Mandalore Partners works in corporate venture capital as a service. So it's a model where we help corporations, mainly insurance companies, to strategically invest in innovative startups. So VC as a service allows those corporations to leverage external innovation without having to build in-house venture capital teams or infrastructure. So if you are a typical insurance companies, this model is very valuable because you can assess some cutting-edge Insurtech solution out there that address your gaps in your offerings, improve your operational efficiency, etc. And when you partner with those companies, then insurers can test new technology faster without high cost, high risk associated with building them internally. So it's a fund. The way it works is a VC fund that invests in startups, which is slightly different from the corporate venture builder, where insurance will build their own startups. The two models are slightly complementary, but different in their positioning.
Got it. So you help the insurers build these new propositions, digital propositions, and also you may invest in them as well.
So the way it works is that an insurance would tell me, I need you to look at how I can improve life-saving distribution with generation Y or Z, whatever. And so I look out there for digital robo-advisor for generation Y. I found maybe 5-10 of them. I select the best in terms of partnering with startups, and I also look at the best for investment purposes. So I introduce them secondly to the different companies. So I do my search and selection. I introduce them. This the thing maybe out of 10, 2 or 3 are interesting, and they will invest in. And I try to select one to invest in.
Got it.
And then the thing starts to to go for a long cycle of partnering and investments.
Yes. Agreed.
This sounds like a very efficient way for the insurers, right? So they don't have to spend the time or allocate the resources, but yet go on to pursuing innovation through this whole CVC as a service model. So
correct. Today's in the world, there's only 2-3 models. The first model is insurance will start their own corporate venture. So they have to recruit internal teams. The model seems to be inefficient on the long run because you don't attract talent with compensation, and you usually change your mind. But the fund is changing their mind because of the strategic round. So every 3 years, strategy change in a corporation, while a fund has to be like 5 to 10 years. So it doesn't fit. And there's a lot of research on that, and internal model doesn't work. The second model is you invest as an LP, so limited partners in a GP, so general partner. So you invest in a VC firm in shorter terms. That works. You have great financial returns if you pick up the right VC, but you never decide because by design, it is the VC that design. You cannot really shape investments the way you want to address your own gaps and so on. This model works, but doesn't fit strategically your purposes. So the third model, which is VC as a service, was created about 10, 20 years ago in the US from Japanese corporation trying to extend and work in the US. That's how it started. And then this model seems to be more appropriate for insurance. So I specialize in that, mainly in Europe, worldwide in the past, and now mainly in Europe. I'm looking to working that to extend that into Asia.
Got it. It's very interesting you say this because one of the insurers in Qatar Insurance Company tried, and I say tried because I think it's probably going to disband that. They built an internal and for various reasons, personnel, cultural, and the other reasons that you mentioned, it doesn't seem to have worked as it should have. So perhaps this kind of a model is a better approach.
If you build your own, you have, of course, the powerhouse of the insurance and the branding name, but then you don't attract necessarily the right startups. First, they come because they think you can handle them. If you don't have work, how you can partner with startups is difficult. Secondly, you attract usually not the best, because startups tend to think that you are not really a professional one. You are more strategic. You don't look at financial returns. And then the teams usually are not compensated the way they would be in VC funds. So they have no carried. So those factors, if you pile them up, decrease your probability to attract the best startups in the world.
Yeah.
Interesting. So that's very insightful to know. But when we look at the whole insurance sector, and I think this is global across itself, it's one of the slowest sectors to change. But when we look at, let's say, past 3 years or so, we're finally seeing some impact of those insurtechs that have been making the news have an impact in the wider insurance ecosystem itself. How have you seen this evolution from the standpoint of where you are? How has this panned out? Are there any geographical or demographical variations? What key moments have really shaped this change?
Yes, the insurance has been traditionally slow to innovate in the past few years, but I've seen a turning point. Insurtechs that are driving change by introducing digital-first solution, automation, or data-driven decision making were interesting. I've seen worldwide a key moment of that evolution. First, I think the rise of embedded insurance. It started with P&C, and now you see more and more in life insurance. So embedded insurance, I think, has been like a turning point. So this solution, and I've seen worldwide, pops up somewhere in the US, and then you have seen Europe, and in Asia, Middle East, etc. So that's the first one. The second one is clearly, without any doubt, the adoption of AI and all the machine learning for the writing, claim processing, for decision, customer service, and so on. So this is now very much a mass market. And during the pandemic, insurance has no choice but to accelerate the digital innovation, digital transformation. So it was forcing insurance to adopt remote and digital solutions. So it has also done be a good thing. So those are the 3 points I've seen over the years, for the past 4 or 5 years. In terms of geographical and demographic variation, I'm more specialized in Europe, but the people that work in North America was more focusing on improving customer experience and so on.
Right.
The one in Asia was more on financial inclusion, microinsurance, mobile first solutions. And in terms of age, I think that solution for Generation Z millennials demand great experience pushing insurance to innovate faster. So this is what I've seen. When I was in AXA, we look at auto insurance in the value chain, and we realized that about 50% were to improve distribution, 30% was to improve to create new products, pet insurance, child insurance, and then 20% more about claim. So that's more or less, if you want, the different points, the different region, and the different chain.
And obviously in Europe, some countries have been a little more at the forefront of insurance change. Germany pops up to mind, France as well, now of late, let's say last 5 years or so. And it's interesting that you said, obviously insurers want you to help them sell their products. So distribution is a key area and help them save their costs. So claims is another area where insurtechs can play a part. You mentioned AI. Obviously, Gen AI is the rage, but AI has been with us for a long time. So any first look at some of the new developments in how AI is being used in the industry, especially insurance industry, and what challenges are you seeing some of your portfolio companies or clients facing when adopting this?
Yeah, so we receive a lot of AI solution in the deal flow. The key applications, I think there's about 4 of them. First, on the writing. So AI models analyze a lot of data sets to assess risk to more accurately and personalize premiums. So number 1. Number 2 is claim processing. Automation reduce the time needed to process claims, improving customer satisfaction. So that's the second one. Of course, obviously, third one is fraud reduction. So AI here identify anomalies or detect fraudulent activities in real time. And fourth, virtual assistants to improve customer service, try to better convert them, going forward. So it's actually one element of that. The challenge is basically driven by the data that can be collected. So the data quality and availability, because insurance sometimes do not want to put all the data for the internal data. That's one challenge. The second challenge is you have, at least in Europe, a lot of regulatory compliance to do. And the models of AI may comply or may not comply. So there's some issue there. And obviously, some cultural resistance. Traditional insurance often face internal resistance because AI, people think that they're going to take their job. In claim processing, you have all the setups with a lot of people. It's quite organized, and sometimes outsource some in offshore and so on. And in AI, instead of thinking that it's going to complement your process, think that's going to take their job. So obviously, a lot of pushback there.
Yeah, absolutely. That is a big issue. Yeah.
No, all those challenges sounds quite universal.
Yes.
Yeah. So in fact, I think a lot of the insurers, I think their understanding is now to start to implement the whole AI component internally, and before they give it as a service off to the customers outside, just to get the culture in check. You mentioned about how when you look at insurtechs for the selection, it's a lot dependent on the traditional insurance companies' goals or their requirements. But as an investor, what do you look at in an insurtech? What are the specific things that you look at when you're assessing a startup? Is it always, is it the TAM? Is it the tech stack? What are your focus areas?
Yeah, to make it easier to comprehend, I use the Bell-Manson model to access startups for corporation. It's composed of 4 dimensions. The first dimension is the market fit. So it's startups solve a real problem in the insurance value chain. So I'll try to look at where it happens in the value chain. The second is product competitiveness, or where is the technology unique, or how competitive is the technology. The third is the business model. So how do you get money? How do you generate revenue out of it? Is it SaaS? Is it license? And so on and so forth. And obviously, the fourth one is the team expertise. Are they capable of scaling the product, but also are they capable to work with the corporate? Some startups are great in the 3 other elements or 4th elements, but they cannot work with insurance. So you're looking, if insurance is a ship, you're looking for Corsair, but then you end up with pirates, right?
Yeah.
So you have to make sure that the team or the CEO is compatible with the corporate as well. And it's not sometimes so easy. Let's say, and this is difficult. I think it's you have one chance out of two to find the right fit. Let's say mathematically, if everything it's okay, you have 80% of each, that the market is great, 80% the team is great, that you think is going to success, but 80% square 4 is actually 35%, something like that. So it is the more elements you add, the lowest you change of success would be. So that's how I look at startups.
Can you mention that name again of that framework, Min, again? The Bell?
So the framework looks at, it's called the Bell-Manson framework. Okay. It's a framework to assess startups, to assess them differently from the stage they are. Obviously, if you are at seed level, you look at the team and at the market for that fit. If you are more on the late stage level, obviously you look at the business model. So you weight the 4 dimensions differently from the stage of the startup you are in, and then you assess the startups. And one element of the assessment is also to see whether the startups can help the corporation. My model being different from a pure VC model, I look at it as well. And as I said, this is like a 5th element into this framework.
Got it.
And the way it works is, for everything to work, you need to align the planets, right? So you take each dimension, you create a percentage of success, let's say 80%. But then in order for everything to, and the probabilities when you look at it is like the more, you add and the less you have the chance to succeed. So for one startup that I do, I need to probably talk to 10 of them, and I probably to source out of 100. So my metrics are 100 startup source, 10% will be with a discussion, and 1% will be we go through in my funnel.
Got it. Yeah, that sounds about. And what is the usual ticket size and stage at which your fund invests?
So because I'm a specialist in Insurtech, I do all kinds of stages. So I do pre-seed, where I put 500K less or something like that. I do seed stage, where I put less than a million. I do Series A, of the 300 million, and I've done Series B, that's go any kind of range. The fund can be a VC fund, a typical SPV. It can be also a search fund. So the search fund is the insurance say, I want you to look for a specific target, let's say a robo-advisor. Then you go and search for the robo-advisor. When you find one, you make an investment. Sometimes it could be a minority, sometimes a majority, sometimes just a buy mandate, right? So so the fund is there to source and invest or purchase the assets.
Got it. And just from a view of our local startups, do you look at the Middle East at all, or is it a plan to look at them?
So all my LPs are European. So the mandate is mainly to look at Europe. Then if I have an LP that are in the region, so I have a few discussions in the past that haven't been conclusive. But if I have an LP that asks me to look at for the Middle East, then I'll do with great pleasure. In the past, with AXA, I used to look at the region, but not recently.
Yeah, got it. Perfect. So now I think we probably answered this question and I think historically also we have seen the various models of startup evolving, especially if you look at the VFox story in Germany. But would love to know your thought as a VC or a CVC player. What type of startups are you seeing succeeding, the ones which collaborate or ones which aim to disrupt? And what are the types? How would you advise a new startup founder, which area or what dimension to focus on?
First, the disruption. So it's hard to back up those startups because the disruption case. So it's when the startups decide to aim at some underserved markets or inefficiencies in the treasury system, and they're trying to go in there. So those guys are usually not necessarily from the insurance industry. And to back them up, you need to make a very big ticket size. So I'm not the kind of investors that do that because my mandate is actually a smaller fund compared to the big guys. And sometimes I've seen for disruption company raising 100 million to do so. And so that's not my where I operate. And you need to have a very deep pocket to back up startup with disruption. You can see some of them went to unicorn level, but then collapse completely in the US. So that's not my approach. So I work more on collaboration in three types of collaboration. The first is obviously distribution. Startups use the insurance to distribute its products, or vice versa. The insurance product is distributed by the startups. The second collaboration is customer supplier kind of relation. So the startup sells its services to insurance. Sometimes the insurance is there it's the opposite. So the startup is the client. Okay, so on the larger one, the more mature one. And the third one is for reinsurance. So a lot of insurance products need to be reinsured, and the insurance is there to back it up in that space. So I work on those three domains for collaboration. I think those are the cases I'm more familiar with, and I have some good track record, good success, and so on. So I keep on doing collaboration. Easier also for my model to have, for my model to work, collaboration is key.
Yeah, no, absolutely. And I think one of the points that you mentioned about reinsurance, I think that's something that our region, Middle East, can do more with innovative reinsurance solutions like we see in the US, like Markel, so on and so forth. Definitely some VC needs to pay attention to that one.
Yeah. And in collaboration, I have an advantage compared to the VC, because since I work with the insurance and I work mainly on the value chain, so I know all the pain points that the insurance or this particular insurance that working with me will have. So I know the pain points, so I can better source, and I know deeper the business of the insurance. Much more than the traditional GRS, VC, and so on. And so that's why I can better judge whether it would make sense to invest afterwards.
Yeah. And staying on that insight itself, right? So on the regulatory side of things, especially in the countries that you are operating within Europe, is quite tightly regulated. There is a whole lot of rules to follow through. Now, as a startup, how are they navigating that landscape and yet be innovative and yet growing? Or how should they be navigating? Your thoughts on that?
In Europe, you have European guideline, but also you have national guideline. So if you work on the solution with one typical insurance, say in France, you have to comply with the French rules, and you want to extend in the Spanish market, you have to also look at the same domestic rules. Sometimes you use the European because you can passport your solution. So basically you have one in France, but you use the European regulation to scale it in Spain, but it's a long process. It's difficult and so on, compared to maybe to other markets like large markets like in the US or India and so on. I use a lot of M&A purposes, like you merge acquisition, where if you have two companies doing the same thing, let's say robo advisory. So if you have a robo advisor in France and one in Spain, instead of doing the investment in both companies and try to make them to merge, so that the Spanish product can be automatically scaled in France and the French product can go directly to Spain. So it's a faster way to globalize or internationalize the solution. That's what I do. But we work a lot with the French authorities, regulator, the Luxembourg. In every country, you have to take a look at, and so that makes the job very complicated for any Insurtech startups, at least in Europe, to scale. So that's the main barrier that I've seen so far.
And I think here as well, right, in the Middle East as well, I think that is always some sort of a barrier, or I don't know what would be the right term, but it's all the right things to have. But as a startup, you always find difficulty to navigate the number of complicated regulations and things like that.
Yes, that's correct. But not all startups want to scale. In fact, most of them are focused on one market. Actually, the French market or the Spanish market is big enough for any startup to scale, even the Portuguese market and so on and so forth. So any national market, at least in Europe, is big enough. But when you start to scale, then you have to work. The setup is slightly different. We saw a company in Sweden doing child insurance to do like a European base, but they work with reinsurance. Then they have to work with locally, for each country, they have to work with an insurance, obviously, for distribution and so on. So it's a more complex setup. But by design, you have to think it first. So some people think I'm going to be European by design. But if you are local by design, then it's very hard for you to scale, except if you do M&A. In my opinion, from my experience.
Some of the European Insurtech founders that I talk to, they lament about the fact that regulations are so tough in Europe and innovation is a problem therefore, and lack of talent. I don't know whether you hear this comment from the founders you meet.
Yeah, but I hear the same comments in FinTech, in blockchain and AI. So it's almost everywhere. Yeah. So there's
Universal.
I think any place in the world is great to be a founder. Any market is interesting, but you always face the same thing. Product is not ready with the customer, the market, lack of teams, etc., etc. It's the same story everywhere.
Yeah, no, but I think some hubs like the US have probably taken a march forward because of the little more regulatory environment, a little more friendly. And obviously some hubs like SFO and New York have a concentration of talent. And I think probably and to a certain extent, and Munich to another extent, Berlin are also becoming hubs like that.
Yeah, but you have talents and concentration of money. When we launched the AXA venture, we opened an office in San Francisco and New York and so on. But then you have the opposite. You have the other side of the coin, which is high valuation, a very expensive person to have. You pay a talent in San Francisco maybe twice the package for Paris and so on. So we then start to look at Berlin, Milan, Zurich, and so on, and you have maybe a smaller market, but I can tell you, if you do a successful startup in Switzerland in life insurance, it's can be very high because the concentration of life insurance over there is enormous. So you have benefits anywhere. I couldn't find any interesting deal in the US and in Europe. In fact, I found deals, but then I found similar deals outside those hubs at half the valuation, but doing exactly the same thing, sometimes at the later stage, just because they were in a different hub.
Yeah, it's an interesting point when you look at it from the VC's point of view, isn't it?
From the investment, but from the buy side, it's not interesting sometimes.
Yeah. So taking that a little bit forward, a young entrepreneur, I'm sure many of them come to you in terms of advice for entering sectors or parts of the value chain. And what other sort of key areas do you advise them in terms of, if you're starting out in this space, what should they look at?
Area in some value chain or area like...
generally advice for Insurtech entrepreneurs.
When they come to me, so I'm not a venture studio. When they come to me, the idea is pretty preset. So I don't provide ideas. I listen to ideas, whether that makes sense. So that's the first. I'm not a venture studio yet. And sometimes we do venture studio, but so we have clear investment themes that we share. We look for entrepreneurs to implement those themes. So what I said, the idea is there. I'm trying to see whether the idea makes sense with any with insurance companies. We pick up one, and then we discuss with the people at the head of departments to see whether that could make sense. They could implement it and so on and so forth going forward. So that's how I navigate to that. Let's say we talk about the same idea about baby care or baby child insurance, whatever. Then if that happens, I look with the insurance whether I can create a collaboration to distribution, reinsurance, potential customer or supplier. And so I navigate to those three dimensions to see whether I can make it happen. And then if yes, then I will look afterwards at the investment. So I usually try not to advise, but to react to ideas and so on and so forth, saying that, yes, this is great, or this is not in my current roadmap. And I don't claim to know everything about Insurtech. I just have a certain investment themes that I'm trying to look at that. And right now, my most interesting one is how I can implement, for example, blockchain in different solutions to improve efficiency. And also I'm trying to link life insurance with banks, because they don't talk to each other, and how I can solve the advanced feature. So the advanced feature is when you have a life insurance, you want to have an advance based on you, and the insurance gives you money based on the collateral that you have, and they hate that, right? Because they have to give you money, they have to lend you, they have to follow the loan. It's not their business model. So usually that's the job for the bank.
Okay.
And so basically we try to connect banks with insurance to do this. And in France, it's called the Lombard credit, when you pledge your life insurance for a loan. But in order to do that, traditionally, you have to be at the same bank. So for example, you are a private bank, you have a life insurance there, and you go to your bank and you go to your customer and they give you a loan. And usually you have to have a significant number of amount there. So it's very face-to-face method. It's bank and insurance together. And so we're trying to break this by say that we can make a loan to any insurance. any bank. And so we create a platform so that we can get any insurance to any customer with a life insurance to put their amount there and the bank to loan. So it creates like a
little bit of liquidity for the
liquidity
customer.
events, democratization of this process, which is a very traditional one. So that's what I'm trying to do now with founders.
Interesting. That's
Very
interesting.
interesting. It's a nice niche.
Yeah,
approach.
it's a niche, but it's a multi-billion business.
Yeah.
But it's a niche. Yeah.
No, very
Excellent.
nice.
We have come to that section where it's the rapid fire section where we throw questions at you and we expect a quick answer in less than 60 seconds or so. Vidya, I know the first few are yours. If Min, you're ready, we can fire them your way.
Yeah, go ahead.
Great. So what's this one emerging Insurtech startup that you're so excited about right now? And I'm guessing this is the blockchain one, but
yeah, it's called Pledger. It's on
Pledger.
blockchain. So these startups
okay.
disrupt private banking by leveraging blockchain technology. And so it connects your life insurance with any bank for a loan with your collateral as a life insurance. Yeah.
I love the branding.
Pledger. Nice. So what's that one book or blog or tech talk or YouTube video that really influenced your journey as a VC?
Yeah, so I'm an amateur in triathlon, and I listened to a TED Talks by the CEO of General Electric in Ireland about how Ironman and venture capital could be merged. So a lot of values here in terms of innovation, perseverance, and strategy as well, and how the two can have common values. When you start swimming, you are with other startups, a lot of like a washing machine, you need to find a way to position yourself. And then when you start to scale, you like biking machine, and technology on the bike or technology can make you quicker. And then when you run, you need grit or resilience or perseverance to be a finisher, right? So that's the kind of values I've always influenced by.
Nice. I think we've got like 4 or 5 guests who've spoken about their journey as a triathlon runner and then how they link it to their work. Sounds good. What's that one metric that you prioritize when you evaluate startups?
Without any hesitation, the revenue generation potential. That's the only metrics that matters to me, how the startup can generate revenue. The rest comes afterwards, cost, user, adoption, founding, and so on. But the revenue is the most important.
Follow the money.
Yes.
What is that one technology that you believe will disrupt the whole insurance industry, say next 3 to 5?
As you may guess, would be blockchain, because I was part of an advisor to 3I, so blockchain insurance innovation industry. It came to an end, but I found here a lot of use cases that can impact agent, insurance, reinsurance companies as well. So without any doubt, blockchain, but it has not been used correctly in the past few years, more as linked to crypto. But in fact, it's just infrastructure and technology. So that's what I've been working on.
Okay. And you mentioned about this whole fifth dimension. Is there a one trait that you look at in a founder in the founding team? Yeah,
a lot of resilience, and what at the tech talk they call grit, because building a startup is very tough, and you go ups and downs, and it's a roller coaster. And I've seen a lot of founders give up when times are bad. And so the one I work with, my best exits are with the founders that were able to go through to this up and downs and so on.
Sure. Over to you.
Yes. So these days I'm experimenting a lot with productivity tools. So is there one productivity tool that you can't work without?
Yes, I use CRM a lot for anything that I have. I use a CRM called Streak to be a plugin in your Gmail. So every message that I have is tagged with all the things. And so I can have a very good collection of what happened. So for example, if I look at a deal, sometimes I say no, and then 2 years later, they come back to me and so on. So I have all my notes, all the links and so on. So now the CRM is connected with competitors of this CRM, the founders, what they've done. And so have a lot of intelligent information about that particular deals afterwards. The same goes with investors and so on. Because I reach out, for example, for fundraising to, 100 investors, maybe 99% would say, no, sorry, one will stop. But then I have a continuation with about 5-10 of them. Maybe not now, they will invest, maybe later. And so so I have a very good memory in a sense. I have no memory, so I have used the CRM to build a memory for me.
Great. Streak, you said. Very nice. And what is the one investment that you're most proud of and why?
People will say invest in yourself, but apart from that, I think that the one investment I found interesting was in my portfolio, a company that has become now a unicorn. It's called Ledger. They are now the leading solution for hard wallets for cryptocurrencies. And this company is unique because it has about 80% market share in that space. So I'm proud of that investment from when the time I was looking to the founders to now.
Is this the crypto wallet, right?
The crypto wallets, yeah.
I have one of Ledger.
Yeah, okay.
Absolutely.
Great.
What is the one piece of advice you'd give to aspiring insurtech entrepreneurs?
It's very difficult to launch a startup. So when you launch a startup, don't necessarily disrupt, try to cooperate. You may disrupt later on, but if you start to disrupt from day one, it will take you a long time because first you need to raise a lot of money. And insurance, they have a lot of cash and so on. So the people like AXA will say, if you make a company is worth 1 billion, it's great, but 1 billion, we manage 1,000 billion, right? So it's not going to change our balance sheet and so on. So it takes time to disrupt. It's not so easy. So I think if you're an entrepreneur, at least with me, I would suggest to start first to cooperate.
That is an important piece of advice. And what is the one industry buzzword you wish would disappear?
So in the insurance industry is the word risk, because the insurance risk assessor, risk management is very great, but it's not very compliant with venture investment, right? Because it's all about taking risk every day. And so if you work with insurance that refuse to take risk all the time, it cannot work.
Yeah, no, absolutely. And I keep saying that there is a price for every risk, right? Yeah. So you can't say don't take risk. And on that note, what is the one big risk that you've taken in your career?
Probably when, as you see from my background, I was working for, I launched the first fund, I built a venture and so on. I was a GP there. And I took a risk to shift that to work with another insurance to start, because AXA was going to be a bigger. Today is 1.2 billion asset management. And I was very good in the 0 to 1 or 1 to 10 startup, not to 10 to 100. So the decision was, do you stay in a GP company that would grow and put more investment to go in size and look at the next step, which was easier, you earn more, it's maybe less risky and so on? Or should you stay in your comfort zone or your specialty zone to do more early stage? And so I took that stage because it's where I've been working. So the question was for me at that time, I don't regret that choice, but it was a risk to step away from a big position, big role, big whatever fund, and then work more with the smaller startups.
And it definitely worked out well. So that's a good risk that you took.
Yeah. And now venture studio are becoming venture fund, want to be early stage to do venture studio. It is the world I am in, and the world I'll probably be working in the rest of my life. So I think it's better to be in a spot where you're made for, right? It's the Japanese call that ikigai, right? It's
ikigai. Yes.
So my raison d'être was more to be in that space.
Nice.
Very nice. And that's a nice French word to end this podcast on. It was fabulous to have you on board.
Thank you very much.
Thank you so much for joining us.